Good morning, guys. Good morning. I hope you guys had a great weekend. Great weekend. A lot of reading to do, especially after last week. I went back and just reflected on my trading week. Um, the entire rally that happened, the entire rally. Personally, I missed the rally. All right, because certain things I did expect a rally. There was going to be a short covering that was going to happen, but I just didn't expect such a big move. This is a rare move that happens every few years, once in a while, right? And I guess it was one of those. But should I have? I should have maybe known a little better. I mean, I'm a lot into spot gamma. I understand options, VIX very well, so I should have seen the rally come in. But one thing that I'm proud of myself, on Friday when I was looking at the channel, I drew this 15-minute channel. I kept sending it, right? It was uptrend from back from the rally that I extended, and I did not add on to any puts. I just stayed quiet. I stayed back. But for the last 4 days, I added on to no puts. So for me, that was a huge win on its own. Not entering at the wrong time when the market was totally strong. Right? Why go against the trend? And sometimes these channels help a lot on trading view when you draw them. This is a 15-minute channel. I sent this in the chat also. Right? And it just held. The uptrend was too strong. It just kept on going up on every stair. So I just stayed back. You know what? It's okay. I'll miss the rally. Right? I mean, that's fine. And on the daily, if we look at SPX, these 4 days, a huge move has already taken place. What usually happens after such a huge move, right? What usually happens? There's a very high chance, there's a very good chance that the market now consolidates for some time. And when the market consolidates, then we see, do we go up or do we go down, right? So this week, a lot of patience might be tested again, right? I speak a lot about patience, but one thing patience has helped me with is I trade less, and my accuracy of being right is a lot higher than it was many months ago or many years ago, right? So my accuracy has gone up a lot, and you know what? I'm really happy with it because in the options, in trading, the returns are so high. Even if you hit a few every month, you're laughing, right? So I missed the rally, but I did not buy no downside positions. So huge rally occurred, on the daily. We're above the 50 MA, and now the question is, what happens after? Ethan, if you're listening, you asked about the spot gamma. I'll just quickly go over the gamma report in a little details. What exactly happened? Number one, there's a lot of if you guys read it, you guys can also get these things from there. But there was a lot of deduction in negative gamma, right? Negative gamma had a lot of reduction took place. What does that mean? A lot of puts that were expiring, they closed here. A lot of puts that were expiring last week. There's a big chunk. We spoke about it. There was a big chunk that was expiring, and a lot of covering happened here, right? But while this covering was happening, there wasn't really much call buying going on around the names. Some individual names were picking up. A Square, PayPal, they had some call buying going on, but not all names, right? Very few selected ones, right? So there was a lot of negative gamma reduction, which obviously caused this rally. Even spot gamma, like these people are fully backwardated. Even they didn't expect such a big rally, but it happened, right? So things happen in the markets, right? So that there was that, and then now, going into this week, right? Going into this week, because VIX has fallen sharply down. So let's run the VIX quickly, right? Because VIX has sharply fallen down. What does that tell us for this week, right? When VIX is above 27, I usually say I don't buy calls, but I still probably won't buy calls because I need to see more legitimate reasons before I personally buy calls. But that does not mean you don't have to. If you think the market is going up, it's a rally, that's your own decision, I guess. But here, what happened on this was, when VIX is above 27, when it holds above these levels, near 28, 30, there's a lot of volatility that takes place in the market. A lot of these big percentage moves on S&P happen, right? On SPY or the indices, which, where we catch a lot of scalps, you can make a lot of money. But now with this reduced VIX, the implied volatility, the big percentage moves in the market might not take place, right? So on SPX, for example, we're probably looking at less than 1% today, total move, which is still a lot, right? But again, can it be bigger? Of course, if some headlines come in, anything, then obviously, gamma doesn't matter, then algos are in play, right? So there will be a lot of reduced volatility, and with the reduced volatility, what usually happens? The option pricing, the options which are priced with the VIX high, now the VIX is down, options are probably going to settle a bit. Means premiums will go cheaper on calls and puts. So if you're a stock that has ran so much, so for example, if I go on PayPal right here, right? Let's see. So PayPal had a decent rally, right? So PayPal had a decent rally. Let's say on PayPal, if PayPal starts flagging here, right? Unless you take your profits quick, if it starts flagging here and VIX is settling, is coming down a bit more, PayPal is going to lose value in calls here, and it's going to lose value in calls here, unless you're playing the near data 1-2 weeks out, or maybe 3 weeks, or whatever it may be, and you're taking your profits fast. That's fine. But if you're holding on to your profits for next day, one red candle, if you have calls, is going to take away a lot of premium, and if you have puts, one green candle will take away a lot of premium. So you have to be very selective, very careful when you buy your options this week, right? There will be a lot of options that will go up a lot, right? But those individual names have to run. The move has to happen, right? But overall, you just have to be careful. So that's that. And another thing, the market was very, very well hedged, right? When we said 30% gamma was expiring, or delta was expiring last week, market was very well hedged. Means all these big fund institutions, they did not really have to sell in case of bad news, anything that came out. They had enough puts on the indices or their respective stocks that if the market was to dip, they were hedged, they would cover their profits from there, right? So they didn't have much to lose. All right. So but now the market is no longer well hedged. What does that mean? That basically opens more room to downside. Because if the market sees weakness now, or something happens, a lot of puts underneath will be bought now, right, for the next leg lower. Now, is this going to happen? I personally believe in the coming, I'm not saying it's going to happen this week or next month. Maybe the market goes fully bullish mode for the next 3 months. I have no idea. When the data comes in, I will look into it, right? Basically, personally, I do believe sometime we hit this zone, right? I do believe that sometime this year this zone will come in, but the last week move had absolutely absorbed the last 4 weeks. Now, this is a big move up. All right, so maybe we bull flag on the weekly, maybe we go towards where 4,800. It's a possibility. It can happen. Yes, it can. So I gotta stay open-minded, obviously, because the last 4-day rally that happened, right, it was a huge rally. It wasn't just something small that took place, right? So now, obviously, I'll be keeping an eye on geopolitical closely a little bit, what news are coming out, and then obviously what's happening in the options world, right? But obviously, another thing that you need to understand, that we're now at a very critical resistance zone. This 4,500 zone won't be easy. This 4,500 zone won't be easy. 3 reasons. Number one, right here on the first retest, when the test happened, there was a nice little downtrend. And then the last few weeks ago, when we tried going above it, they sold it right off. And it was unable to hold above it. It consolidated, but it wasn't able to break above this. So that's why 4,500 is extremely important, right? Something when understanding. It's not just resistance, it's understanding the resistance, what forms the resistance, right? So 1 or 2, consolidation and failure. And then 3, they try taking it back up there, and nope, got to go back. And now it's approaching 4,500. So 4,500 key. So 4,500 key will be major resistance, right? Can we pop to 4,550? Absolutely, right? The question is, do we hold? That's the question. Do we hold? If we hold and we consolidate, then yes, the market is likely going to rip a little bit higher too, right? But if 4,500 is not hold and we go below 4,400, and then 4,400 is a must hold for now. For now, 4,400 is a must hold, and then we got 4,380, right? And then all the way towards 4,300. Then at 4,300, we go decide which way, right? If we go towards 4,300, that basically opens the doors to the downside, I think. But if we hold above 4,300, then it's just likely consolidation, right? Because after going up so much, 4,300 can also be a retest, which will be the highs of roughly the last week, not last week, last week. Right? And then 43.95 level we have on SPX as a volatility trigger level. What does that mean now? If today we trade underneath 43.95, the first test we should bounce from 43.95 if we test it, and if we hold below 43.95 for some minutes, for 15 minutes, half an hour, and we build a bear flag, there's a good chance that the market takes a little dip to the downside. All right, there's a good chance. Like you can probably catch put scalps, but we'll see what happens. We'll go live over live, right? And the rally was crazy, and so we see. So I hope this helps understand. And now Boeing, BA, prayers to all the families that were involved in the incident, right? Some news came out. The China Eastern Airline crashed, killing 137 people. God bless. Rest in peace. Right, not good. This plane has crashed before also, but these news come out sometimes, and then obviously it affects the airline stock. And now it's opening the gap down, and they're canceling all their 737 and 800 flights. They're putting a stop on it. So at the open, let's see what happens. If we test 190 by any chance, there's a good chance they might sell this stock back to 180 again, and then maybe this gap fill might be likely on Boeing. This right here, which happens to be 157. So don't ignore this gap. All right. With this negative news, Boeing, if it in the morning, I think we see weakness, and if the market indices give up a little bit, then Boeing can push hard. So keep an eye on Boeing. Puts will be a little expensive with the gap down, but it's a stock that you can probably play for 5-10 points down if it happens. So Boeing is the number one hold, the number one that I would keep an eye on today. Right, and then Pinduoduo, PDD. They had their earnings. Most of the Chinese names are, I think, holding their red, I believe. But PDD had earnings. They did great. They had a 3% revenue growth. They beat their earnings. But now we see if the Chinese names hold, then this obviously has a way to go right here, all the way towards 53, right? So a lot of volume came in last week. Chinese names, I think they saw one of the best percentage-wise weeks where they went up, right? So keep an eye on Chinese names. I'm not saying they're going to keep on running, right? Maybe eventually they need to put a bottom in, like Baba, for example. How low is it really going to go? Unless some delisting news are coming, how low is it really going to go, right? It already hit 73, right, last week. And then this was a huge opportunity where it bought calls. So Yash, congrats. T, you called it, right? And congrats to the people in the group who bought it. And now we're just here from the IPO early resistance, right? What happens here? The main thing here for Chinese names, I think, see, in one thing, have they bottomed? I think the bottom is unlikely. This likely is the bottom. The question is, day-to-day basis, do we go up or down? That's going to be really hard to navigate. Right? If China was really strong, was good, now they're gapping down. If we take out the last week's high, that's nothing but strength, and we're probably going to go test this 130 level on Baba, or 128. Right? This zone right here, we're probably going to test these highs where it got rejected from a few times, right here, right? So if we take out last week's highs, so Baba, Chinese names, I would definitely keep an eye on. If they take out last week's highs and we hold, there's a $15-20 move that you can catch. But again, geopolitical tensions, they matter a lot. And overall, if you look at it on the weekly, right, on the weekly, if you look at it, there's still a lot of resistance. There's still a lot of resistance, right? So it's not out yet. So it has a long way to go, right? So it's got a long way to go before we can say that the bottom or anything is in, right? So these are the trend lines that you need to be paying attention to. The first one, and then the second, and then the third, right? You can draw these from the top. I can send a chart if you need in the group. And another thing, guys, for puts, one thing that you need to understand, position sizing is the key. We nailed so many puts in the past, but if one put goes against, we hope and you don't go in heavy. Right? Don't go profitable on 5 plays and then on the 6th one you're in heavy. Don't do it. It's a major mistake you're making, right? You should still be up huge net. So position sizing and patience is key, and it's must. And in this market, it will be required more than ever before, right? And Costco, yep, I'll go over Costco. Pushpa Raj, you're asking about the gamma levels. If I can explain, yes. Just give me one sec. Costco is just a nice weekly breakout, right? Nice weekly breakout. Walmart also looks good. MACD lining up, and I think if the market holds, everything's good. If it takes out these highs, I guess it's to the upside. That's all I can say. Right, it's a nice little weekly uptrend. But again, you don't want the 1 of 4 double top here. So if you do play Costco, I would recommend vertical call spreads. I would recommend vertical call spreads. Why? Because even if the market holds, because here there is a lot of resistance, as you can see. For 5 weeks they were 10th, they failed it, and here even if it holds on vertical spreads, you might at least save money and make some profits, because there's a lot of resistance here. If it gets through, then you get paid on vertical spreads anyways. But these are more safer, they're risk free. Well, not risk free, but like risk is defined, right? And I think there are more chances of this working than paying premium for the calls, right? And you can ask me in the group if you want to play vertical call spreads on this. I can look at some strikes, some reasonable, and I can share my opinion, right? Another thing that I want to go over is DAX. So DAX had a sharp bounce from 12,500 to all the way to 14,500. And the question is flagging here, is there resistance? If the European markets hold here and start breaking out higher, then the American market are likely going to break out even higher, right? Because remember, the tensions came from the European side, not from the North American, right? And then VIX, obviously, we've seen a huge reduction. And now it's just at the support levels here, and we see what happens. I think it's going to go test 24, 22 maybe, right? And then we see what happens. And if VIX rises, then obviously value of the puts goes up, right? And a lot of great individual chart setups there. A lot of great, like Twitter was something that I personally missed. I really wanted to play it, right? I did mention in the chat a few times, but A lot of great setups there, but just be careful to watch catching them now because they had a huge rally. So we can definitely consolidate now. Like for example, Twitter's above the 50 MA, it can easily come and test the 50 MA. I don't know. So you have to be very selective. And this week, reduce volatility. Be careful with what you play. And for spot gamma levels, push by Raja. Let me see. I can go over the pre-market, or if you're looking at the levels right now, the volatility trigger, I go over it every morning. It basically means where the dealers flip. If we hold above 43.95, the market expects upside. We hold below 43.95, that's when the dealers might flip to the downside, right? So that's what volatility trigger level is. And the combos that you see, one level is SPX, one is ES, and those are the levels that the both strikes have more contracts open, right? That's what the combos are, all right? And call wall is basically the top side of the call, the strike that the gamma expects. Like for example, call wall is 4500, so 4500 is the top side for calls or for the SPX movement that they're expecting. Downside for the put wall is 4100. So a huge difference right there. So 4100 to the downside they expect, and then 4500 to the upside, right? And so I hope that helps. But if you want to understand more in details, I can post the link, right, where the spot gamma they give out, they define all the terms pretty good. And with this, thank you guys. We wish you all the best. Manage well. Position sizing, patience, I cannot say it enough, is very hard to follow. I have trouble myself sometimes.